All right, to look at this standard. It is a new standard and it forms part of the International Financial Reporting Standard. It's not a new thing for every one of us or to every one of us because the Institute of Chartered Accountants of Nigeria, ACCA, almost all accounting bodies that we know as actually have one or more lectures, one or more training on IFRS S1 and S2, which is tagged sustainability reporting. So before I start, I want to introduce this platform to you. This is Elite Professional Accounting Services. And what we do majorly is that we organized lectures. Either this our very renowned professional body, which is the Institute of Chartered Accountants of Nigeria, for both ATS, this accounting technician scheme, or for professional level, from foundation level, skills level, and professional level. So also we offer professional services, taxation, auditing services, and all. So we offer that as well. So just to name, so the old bottom line is that we offer any services relating to accounting, auditing, taxation, and what have you. So that is that. Now, let us start because of our time, because right now I am also at the Ibadan District Easter picnic. So I just have to excuse myself there to have this lecture. Now, IFRS S1 and S2. As we all know, virtually all standard has one or two requirements for disclosure, virtually. But we have some standard, basically they call them disclosure standard. Disclosure standard. And this example is International Accounting Standard 10. And we also have, that is events after the reporting period. We also have IAS 8, all right? So, which is accounting policies, changes in accounting, estimates, and error, all right? So, those are disclosure standard. Now, this IFRS S1 and IFRS S2, they are also disclosure standard. Unlike when you are doing all of this IS 33, when you are doing IS 36, when you are doing IS 16, when you are doing all of this standard under financial instrument, IS 32, IFRS 7, IFRS 9, all right? So even though some of these, they have disclosure requirement, but you still have to make out some calculation. You still have to, because like IAS 16 now, it is referring to particularly property, plant, and equipment, which is an item under financial position. All right. So it is referring to that item. This is the guideline for you to to treat this particular asset. All right. And when you are talking about IAS 2, it is telling you that, okay, this is the requirement that you need to follow, the procedure you need to follow when you are accounting for inventory. All right. So those standards are telling you that, okay, follow this particular procedure in accounting for each items in the financial statement. All right. When you are talking about revenue, we have IFRS 15, like that. Even though some of them, a few of them, or most of them have disclosure requirements inside them. But we have some standard, particularly, you don't have to calculate anything. What they are telling you is that disclose. And don't forget that what we do in accounting is that we provide information. We provide information to our shareholders, to stakeholders. And stakeholder in the sense of providing information to the government, to lenders, many like that. All right. So we provide information. So disclosure requirement is telling us that, okay, some things may not be related to a particular period of financial statements. All right. To a particular accounting period. But if it is not related to them, does not preclude you to not give the same information to those people that need them. And who are they? As we've mentioned, users of financial statements. All right. So, whatever happened after the accounting period does not mean that you cannot actually, give this information out. Even though we have some that are adjusting and we have some that are non-adjusting. All right. So, all right, I will answer. Someone is asking a question. Is there a material for this training to follow up on? I will try to share this particular material with you. Though we have a more comprehensive package, and that is more of, when we want to, have a class particularly for this. But this summary, of course, I will share it with you because it is a project summary that was done by IFRS themselves. All right. So I will share that. Just follow through. After the class, I will drop it to the platform. So sorry, I'm just trying to double task by admitting people at the same time, continue the class as well. Please, someone also said the audio is not stable. Please, is it the same thing applicable to others also, so that I know whether it is the problem from my side or from his own side? Can you hear me quite well?
I can hear you, but maybe because of where you are presently.
Okay, that's true. Okay, thank you very much. Thank you very much. Mr. Sunday, please kindly check your network. I think more so I am on the roadside, so I just parked somewhere to have this class. All right. So thank you very much. Now, so the major, like others, like other like particularly the IAS 10, IAS 8, and some other standard. This same way, we don't have anything to calculate. All right, we don't have anything to calculate other than when you have a particular information regarding the content of risk-related, sustainability-related financial information or climate-related disclosure, then you have to disclose it. All right, so we don't have to stress ourselves because this in particular, it's all about disclosing. Give the shareholders information. They need to hear this. Okay, give it to them. What happened to what happened to trading? What happened to a particular supplier? Okay, do we lose any though some financial statement? Because when you are auditing, in auditing, some auditing requires you to go and look at the book and all of that. But in auditing as well, we have a form of the audit. Please, if you are coming in, please try as much as possible to mute yourself. I also want to appreciate that because I won't have to be going back to where I have you as participant, then to be muting you one by one. So please mute yourself as you are coming in. Thank you very much. All right, thank you very much. Really appreciate that. So some auditors, huge audit firms, when they are auditing, they actually incorporate this particular information in the financial statement because it is part of auditing big companies. It is part, but we don't really have it as a requirement under International Financial Reporting Standard. There is no requirement. If you don't do it, no problem. All right. But now we have it as a principle. I don't want to say law, all right, but we have it as a principle. We have it as a requirement. As an auditor, as an accountant, you need to incorporate anything that happens to risk, to operational risk that happens, majorly one of the things that we have in mind, one of the concepts that we have in mind when we are preparing the financial statement is going concern concept. All right. So whenever you have anything that will affect the sustainability of a particular entity, then now it is important for you to what? To disclose. So that is why we have general requirements for disclosure of sustainability related financial information. Don't forget, when you have a primary supplier of an entity, then something happened between the management and the supplier. You lost the supplier because with the supplier, you've been getting lower cost compared to what is obtainable in the industry. All right. Then you lost that supplier. Then there is a risk, that will come up as a result of those things. That is just, few, simple example of this particular requirement. Then IFRS 2S2 is talking about climate-related disclosures. All right, climate-related disclosures. Of course, if there is anything that has to relate with climate change or any issues that will, affect the operation of the entity, then definitely there is a requirement for you, which is IFRS S2. Disclose it. Your shareholders need to know. So needful to say also that this has started like a year or roughly close to the end of 2022 to 2023. We've started the IFRS body has started this issue of having this sustainability report to launch it. And starting from January 1, 2024, it has been quite effective. All right. So which means that it may not be possible to be seeing annual financial statement of the period of 2023 January to December for those that are preparing their financial statements from January 1 to December 2023. You may not see it in the financial statement. Some may start affecting it, but it is not important. It's not really a sin if they don't, actually. But now, from January 1, 2024 to, going forward, it is a must for all entities to disclose any issues that relate to the content of this IFRS S1 and S2, including governance, including strategy, including all of the four contents in this particular standard. So the effective date of IFRS S1 and IFRS S2, for annual reporting periods begins on or after 1st January 2024. So we are still safe. There is no problem. Of course, probably from your side, no problem. The record version will be available. Hopefully, no problem. All right. So, so starting from January 1, 2024, it is quite available. Then another thing I would like to say now is that there is no also problem for those people writing financial reporting in May 2024 and corporate reporting 2024. There is no problem, simply because the institute has yet to incorporate this particular standard in their syllabus. All right, there is no problem. So it is not yet incorporated in the syllabus. So don't waste your time in going through it. All right, don't waste your time in going through it. But this is a vital information. All right, this is a vital information for every one of us, because at a point in time we may want to change our clients. We may want to change our employer. So you can never know whether this will form part, this will, please, if when you are coming in, please kindly mute yourself as you are coming in. All right. So it is, and of course, hopefully, probably by November 2024, it may have been incorporated, or by May 2025, it may have been incorporated. So very quickly, let me move on to where we have this standard. So IFRS S1, general requirements for disclosure of sustainability related financial information. So IFRS S1 requires a company to disclose information about its sustainability related risk and opportunity that is useful to investors in making decisions. Quite all right, because whatever we are doing in accounting, it has to do with what? With the investors, has to do with shareholders. All right, so they need information. They need information majorly. Please kindly assist me in muting yourself as you are coming in. All right. So please, I think everybody is muted now. All right. So, all right. So, and don't forget what we've learned, because let me quickly also say this. Whatever standard that we will be having from IFRS, whatever standard we'll be having from IFRS, basically the foundation of this new standard, the foundation of these new standards coming in as time goes by will be from conceptual framework. All right. And that is the foundation. All right. The foundation will be from conceptual framework. All right. And if you've gone through the conceptual framework, you will see that every information that the financial statement will be providing will center around the financial position of the entity and financial performance of the entity and other events or transactions. All right. So, and that is that. So that aspect of other events, we now have it under sustainability related financial information. All right. So whatever the scope of IFRS S1 is now saying that whatever information that has to do with sustainability related risk and opportunities that is useful to investors in making decisions relating to their investment, relating to them providing resources to the company, then it is very important for us to disclose them. So what are the contents of this information? Momentarily, we are going to see them. All right? We are going to see them. I think, Madam Kuburat, that should be you. Please mute yourself. All right? Thank you very much. So, that is just a summary of the scope of IFRS S1. And it sets out the general requirements for how a company should disclose that information. Now, so whatever information now, this standard is now giving a guideline, the requirements, the content of sustainability related financial information. All right. So another question in this document is, how is sustainability related financial information useful to investors? Of course. Now, the bottom line is that now and then, let's imagine something last in 2019, we have COVID. All right, COVID. In fact, the all of these IFRS, CIMA, ACCA, all of them, they start coming up on how an entity should report during COVID-19. How should they report? It is not what they envisage. All right. It is not what, they believe it will come at that time. All right. So they just start coming with various, various notes, various reports on how an entity should start reporting during COVID-19 era. All right. So all of this period, there is no particular standard that has to do with that. Now we have a particular standard that is giving guideline. That is giving guideline on how an entity should report things like this. Then IFRS S1 states that information about sustainability-related risk and opportunity is useful to investors because a company's ability to generate cash flows over the short, period, and long term is inextricably linked to the interaction between the company and its shareholders, societies, the economy, and the natural environment through the company's value chain. Of course, now something happened. Of course, let me just quickly say this. Around probably last year or last 2 years, I was preparing for my final year project in my master's degree, accounting. So, I choose the topic I chose was the interlinks between the capital structure and the entity's performance. All right. Now, where I'm going is this. When I was going through the financial statement, because my period of analysis span over 2022. Now, when I was now going through the financial statement of all of this entity, on getting to 2019, 2020, 2021, virtually all of the entity that I choose as my proxy, they all make losses during this period. Because during COVID-19, performances of all entity were all affected. And that is the area where we are talking about. Cash flows we affect because, of course, what we assess in financial statement, in operational performance is cash flow. And that's the bottom line, is cash flow. So the bottom line is that right here, when there is any risk related to sustainability, the performance of the company will be affected. All right? Whether through policy, whether through the society, whether through anything, all right? Anything, whether through governance, whether through strategy, it will definitely affect the performance. It will affect the cash flow of the entity, all right? So that is the major goal of this particular standard. Now, this is where we need to also look at core content of the standard. Core content of the standard, right? We have 4: governance, risk management, strategy, metrics, and targets. Those are the 4. IFRS S1 requires a company to disclose information about its governance, all right, strategy, and risk management, as well as metrics and targets. So in relation to its sustainability-related risk and opportunities, these 4 core content areas reflect how companies manage those risks and opportunities. So the 4 core content areas are consistent with and build on the TCFD recommendations, extending the structure of the recommendations to sustainability-related risk and opportunities beyond climate. All right? So the governance, which has to do with the management of the entity, how an entity is being monitored, how an entity is being supervised, managed, and overseen. All right? So what are the core governance processes? What are the controls? Don't forget that one of the primary responsibilities of the management is to establish control, is to prepare the financial statement. All right. So what are those things that the management has actually put in place? So governance consists of information that enables investors to understand the processes, the controls and procedures a company uses to monitor, manage, and oversee sustainability-related risk and opportunities. Then we have risk management, information that enables investors to understand that their assets will be secured, their money will be secured, their resources will be secured, that the company's processes to identify assets, prioritize and monitor sustainability-related risks and opportunities. All right. So, what are the risk management established by the management? All right, to ensure that all of whatever resources that the shareholders are putting in, are committing to the entity, will be saved. All right, so the entity, the management, needs to actually put this forward as part of their annual report. So strategy, information that enables investors to understand a company's strategy for managing sustainability-related risk and opportunity. So, which means they need also to provide all of these things that we are talking about, is to ensure that investors, shareholders are well secured. All right, that the management will be telling the investors, don't worry, we get it under control. All right. So then what are the strategy that they have to put all of this in control? Recently also, we have one of this issue in I think in 2023, around January, February, March, April. All right, March, April, and I think it still flows up till April, May, and that is cashless policy. All right, so all of these things are also part of the things that might serve as risk to sustainability, the going concern of an entity. All right, then we have metrics and targets. Information that enables investors to understand a company's performance. In relation to its sustainability. Related risks and opportunities include progress towards any targets the company has set, or any target it is required to meet by law or regulations. All right, so when you are talking about metrics, you are talking about the financial statement. We are talking about carrying out analysis on this financial statement. Then what is the budget? What are the standard you've set against your actual? All right, so you need to actually also put this forward to the investors. All right, so what are the information that will enable the investor to understand that the company has a target, that the company has a goal? All right, so don't forget right now that the core content of this S1, IFRS S1, Sustainability 1, are 1, governance, 2, risk management, 3, strategy, and 4, metrics and targets. All right, so please take note of that. I believe that this thing is not a new thing to you. It's not a new thing, but of course, when you don't know what is inside it, you don't know. But now you know. All right, now you know. So which means you have an idea of the core content. You have an idea of what sustainability reporting, S1 particularly, is all about. Momentarily, we will reach that part of S2. All right, so now conceptual foundations. Like I mentioned the other time, that whatever standard that we will be having, probably today or tomorrow or in the future, they will stem out of conceptual framework. All right, conceptual framework. And of course, whatever information that will be incorporated in the financial statement, which is the goal of a particular standard or any standard, must meet qualitative characteristics of useful information. So which means any information must meet qualitative characteristics. And don't forget what qualitative characteristics all about. We have two forms of those. We have fundamental qualitative characteristics and we have enhancing qualitative characteristics. All right, don't forget that. All right, we have enhancing, we have qualitative. So these conceptual foundations, so it's a mention. So IFRS S1 mentioned a number of qualitative characteristics. So which is saying that whatever information that will be provided, that will be disclosed in the financial statement must meet qualitative characteristics requirement. It is a must. All right, it is a must, because when information does not meet qualitative characteristic requirement and you are putting it in the annual report, then that information cannot be useful. So it is just a total waste of time. It will be making the financial statement too bulky to read, too bulky to understand. All right, so which means whatever information that any entity, any auditor will be incorporating in the annual report, they must ensure that it meets qualitative characteristics. All right? And what are these elements? Like I've mentioned, we have those fundamental, which is relevancy and faithful representation. And we have enhancing, which are comparability, verifiability, timeliness, and understandability. So this standard mentions a few of those things, and those are fair representation. IFRS S1 requires that a complete set of sustainability-related financial disclosure present fairly and all sustainability-related risks and opportunities that could reasonably be expected to affect a company's prospects. So the fair presentation requirements in IFRS S1 include a requirement for a company to disclose relevant information about its sustainability-related risk and opportunity, and to faithfully provide a complete, neutral, and accurate depiction of those risks and opportunity. All right, and that is it. Don't forget that relevancy is talking about that information must be relevant to the decision maker. All right, so that is very key in this particular standard as well. Also, presentation also is talking about that the economic phenomena is to ensure that all the resources, all the claim against that resources that may affect the transactions of a particular entity and any other event must reveal in number, must be revealed in the financial statement. All right, so those are the things, the key things in this standard as well. So it's mentioned fair representation, it's mentioned relevancy, it's mentioned completeness, it mentions neutrality, it mentions accuracy as well. All right, so let's take note of this. So another mention is talked about the reporting entity. Of course, the reporting entity is the entity that is presenting the annual report. So IFRS S1 requires the reporting entity for stability-related financial disclosure to be the same as the reporting entity for the financial statement. The financial statement, the entity presenting its financial statement must be that same entity that is presenting its sustainability-related financial disclosures. All right? So please take note of this as well. So also, there is a mention of materiality as well. All right? So there is also a mention of what? A mention of materiality. So the aim of IFRS S1 is to meet the information needs of users of general purpose financial reports. To comply with the requirement of IFRS S1, a company will disclose material information. All right? So don't forget that materiality is talking about that, and information is material when its omission, misstatement will jeopardize the decision of the users of financial statements. All right. So right here is saying that IFRS S1 is saying that an entity should also comply with the requirements of this materiality. So a company will disclose material information about the sustainability-related risk and opportunity that could reasonably be expected to affect its prospect, that will affect the decision of the investors, the shareholders. So it is what it is important that the entity should what? Should disclose this information. All right. So very quickly, I am almost done in my battery, so I will just quickly. So conceptual foundations here. So we have a quite number of examples here. So I will quickly rush to the examples. You can see example one. A company finds that its suppliers as employment practices that fall short of international norms and decides to terminate its contract with that supplier. This decision has an impact on the cost of the company's supplies. So the company discloses the connection between its decision to terminate the contract with its suppliers, with the supplier, and related information presented in its financial statement. So which means whenever there are issues with suppliers, when there are issues related with operational practices, then there is need for you to disclose it. So when you are disclosing your decision, you also need to disclose the reason for taking such decision. So example two also, a company decides, can you please try as much as possible to mute yourself? Right. Thank you very much. So example two also said a company decides to discontinue a product associated with significant greenhouse gas emissions and therefore closes the related production facility. In its disclosure, the company makes clear the link between its decision to manage the climate. All right, the related production in its disclosure, the company makes clear the link between its decision to manage the climate-related risk and any effect this has on its financial statement, as prepared in accordance with applicable GAAP. So the company discloses the linkage between this decision and other sustainability-related risk and opportunity, such as effects on the company's reputation and its relationship with local communities. All right, so those are the key examples, particularly in this material. So, general requirements. So we have general requirements for location of disclosures, timing of reporting, comparative information, statement of compliance, current and anticipated financial effects, judgments, uncertainties, and errors. So we will share this material later in the day, so please you can go through it. I think I've looked at the core aspect in this standard. So I want to quickly move on to the IFRS 2. All right, IFRS 2. So IFRS 2, climate-related disclosures. So a company applying IFRS 1 is required to apply IFRS 2 to identify and disclose material information about its climate-related risk and opportunity. So the same information that we've looked at in IFRS 1 stems through down to IFRS 2. All right? So which means as company is applying IFRS 1, they are also required to apply IFRS 2. In so, to identify and disclose material information about its climate-related risk and opportunity. So IFRS 2 requires a company to disclose information about the same core content of IFRS 1. Governance, strategy, risk management, metrics, and targets. All right? So climate-related risk refers to the potential negative effect of climate change on a company. Climate-related risks are associated with both physical risks, such as those resulting from increased severity of extreme weather, and transition risks, such as those associated with policy action and changes in technology. Now, you can say that in Nigeria, we don't have issues so much about our climate change, right? You can say that, right? But the bottom line is, when you maybe some of us have heard about the issues that happened in Ibadan around Bodija, all right? So not necessarily have to do with this climate change that we all know. Basically, these European countries, they have issues, most issues with climate change. But when you look at the issues that happen around Bodija, where there is a storehouse of this bombing document, this natural this thing that they kept bomb and all of that, granite and all of these things. You know, all of these resource materials, they explode, and it affects those areas. So this kind of information need to be disclosed. All right. So it could be physical, and it could be transition risk. It could be policies relating to government. So it becomes a requirement for all entity to disclose all of this as part of their annual report. So climate-related opportunities refers to the potential positive effects arising from climate change for a company. Efforts to mitigate and adapt to climate change can produce opportunities for companies, such as opportunities to develop new products or capture new businesses. We can also look at this in some of these companies that produce this new year products. You know, there are some companies that when we reach November, December, they spring forth again. You know, some of this company, I think I can mention this company that produce banger, so to say. That's the best English I can think of now. Banger, right? We always have them around Christmas period, November, December. When January comes, at least we can have them at the beginning of January. By February, by March, April, they are out of the market. So which means this company need to also strategize the decision of the in governance, information about the strategy they have in areas where their products, bangers, are not selling. What are they planning to do? All right. And some also has to do with climate also. You know, we have dry season in Nigeria, we have rainy season. All right. Those are climate changes. So those are the things that the companies these companies are expected to also, you know, to also disclose information related to it. So governance requires, IFRS S2 requires the company to disclose information that enables investors to understand the governance processes, controls, and procedure the company uses to monitor, manage, oversee climate-related risks and opportunities. For you know, when the exams comes, quite all that we're not, you know, having this class for the purpose of class the exam, right? So, however, if I am a student writing main diet, all I have to know is 4 contents. I have known governance. I have known strategy. I have known metrics and targets, and I have known risk management. So what else? IFRS S1 or IFRS S2 requires that an entity should disclose information relating. Then you continue. Governance that will help the investors to understand governance, that will help the investors to understand the strategy they've put in place, right? So, you know, those are the things inside S1 and S2. It is no more than that, all right? So, those additional information that a company is required to disclose information about how responsibility for climate-related risks and opportunities are reflected in the terms of reference, mandates, and role descriptions of the governance bodies or individuals. All right. So how the bodies or determine whether the company has people with the right skills and competence, or whether this should be developed to oversee its strategies. All right. And what management roles in the governance, processes, controls, and procedures used to monitor, manage, and oversee climate-related risks and opportunities. All right. So then the strategy. What are the information that the company have they should disclose so as to enable the investors to understand the company's strategy for managing climate-related risks and opportunities? All right. So those are the things that we have under this S2. So we have climate-related risks and opportunities. So we have strategy and decision making, current and anticipated financial effect. Of course, there will always be the current effect. I can say categorically, at least I know big companies. When I was, as I mentioned the other time, that virtually all the entities that I was using, they all make loss during COVID-19. And I must tell you also, probably in your company as well, my company particularly, we were also, our cash flows were also affected during cashless policy. I think virtually all the company, because we were not prepared for it. In fact, we think it is play. All right, we think it's all play. All right, until when it comes to January, February, that everybody is now going through fintech. We are now going to fintech, financial tech solution, and all of that. So those are the things that we need to look out in this standard. So IFRS S2 also requires all companies to use climate-related scenario analysis to inform their disclosures about their resilience to climate change. All right, it requires a company to use an approach, a strategy that is commensurate with the company's circumstances. They should devise a strategy that will be a solution, a way out all of this mess. All right. So then IFRS S2 does not specify which scenarios a company should use its analysis, but requires the company to use relevant scenarios and provide information about scenarios it has selected specific to the situation a company finds itself. All right. The scenario of a commercial banks will be different to that of manufacturing outfit. Even within the finance sector, for a microfinance B, it would also be different for a microfinance institution. All right. So all of these strategy will vary from company to company. All right. But it requires that the IFRS S2 requires that companies should use strategy that will suit whichever circumstances they found themselves. So to provide information about other relevant assumptions it has used in the scenario also, to enable investors to understand its disclosures and the related methodology. So they should also disclose information about whatever strategy they are employing. All right. So that's just briefly said. So risk management now. So IFRS S2 requires a company to disclose information that enables investors to understand the processes the company uses to identify, assess, prioritize, and monitor climate-related risk and opportunities. You can see that the difference is quite risk-related sustainability information. All right, for S2. Then for S1. For S2, then we are talking about climate-related risk and opportunity. All right, and that is the difference between. Then we have metrics and targets. All right, so IFRS S2 requires a company to disclose information that enables investors to understand the company's performance in relation to its climate-related risk and opportunity. So a company is required to disclose information related to cross-industry metric categories. All right, so which means they need to have a comparability between industry and cross-industry, from one industry to another. So industry-based metrics associated with its business model and economic activity. So we also need to compare our performance within the same industry and cross-industry. All right. Then target that is set, or those that is required to meet by law regulation to mitigate or adapt to climate-related risk or take advantage of climate-related opportunities, including metrics used to measure progress towards this target. So which means companies also need to disclose information related to the target in which they have set, or the one that is required by law for them to meet. This in particular, we are talking about target that is set by CBN for commercial banks, target that is set by SON for manufacturing outfit. You know, they also need to disclose information about how they have put plan to meet these targets. All right. So that is a majorly. So, I think so. It's also uh, 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 this standard also incorporates information about cross-industry metric categories. All right. So as you can have it here, we have climate-related transition risk, climate-related physical risk, climate-related opportunity, capital deployment, internal carbon prices, remuneration, and all of that. So please, I will share this document later after the class, so you can take your time to to go through it as well. All right. So I think I will try to end the class here. So in summary, this is the standard from the project summary as launched by IFRS. IFRS. All right. So that is that. I will take question from here if you have any question. Tommy is raising up a hand. So please, Tommy, go ahead.
Yes, sir. Well done. Thank you very much.
Oh, okay, sir.
Although I joined the class along the way, but
right.
if I understand very well, in summary, can we really say that the IFRS S1 that has to do with sustainability, can we say that relates particularly to the operational activities, the sustainability issue that relate with operational activities of the company? That's the existing operational activities. Why the IFRS S2 relate to those issues, the climate issue that are probably beyond the scope of control of the organization.
All right, thank you very much for that question. Now, the thing is this: when you look at the content is pointing towards governance. Like you rightly said, that has to do with control. The second one there is strategy. That is also has to do with control, monitoring. Then we have risk management. It has to do with operational risk, financial risk, and whatever risk that we may think of. All right. Then you have to do with metrics and targets. So which means metrics and targets goes beyond operational. Even though whatever we do operationally will reflect on the financial. So which means this particular standard S1 is not only related to operational, it's, it points towards all aspects. That is why the standard is saying that we should provide information, disclose information that will assist the investors in making decisions relating to sustainability. So sustainability can be operational, can be financial, can be anything. All right. So that is that about that. Then for S2 is talking about climate change. Of course, climate change is even more operational because whatever will affect operational, whatever we have as a result of climate change will affect the operational. But the bottom line is that when you look at operational, we are talking about whatever we engage in as a business. If you are manufacturing cement, that is your operational activities. Then, if you have high sales, that high sales will reflect in your operational performance. And it will reflect in your financial performance. All right? So, both operational and financials, they are inseparable. And when you are looking at both operational and financial, they are also what we are going to base the assessment of the management. Do you understand what I'm saying? That is what we are going to, everything they are interwoven. All right. But the major point is that both standard, they are asking us to provide information, to disclose information that will assist the investors in making decisions relating to those 4 core content, as we can see in S1 and S2. So at the end of the class, we are going to share this video, and we share the link where you can get this video, even though you are joining the class so late. I believe I have provided the answer to...
Yes, sir. Thank you.
All right, all right. So do we have any other question? So if we don't have any question, I think this is the time. Please, I will. So I wish you all the best. For those that are writing me diets, I wish you all the best. We are planning to have a revision class this diet. All right. So anyone who wants to join our revision class for May diets, and we are looking forward to particularly face past questions from the Pathfinder, Itato squarely. So in the revision class, we'll be looking at least 2 to 3 questions per topic. All right, per topic. Even if time permits us, we look more than that. So we just want to make sure that we cover enough ground to look at past questions from the Pathfinder. All right. So we'll be having the revision, and the information about the timetable will be disseminated when the time is right to do so. All right. So are you saying something, Mr. Collins?
No, I'm
all right. So thank you very much. Like I said, we offer services, professional services, accounting services, taxation, accounting, preparation of financial reports for entities, small, medium, large. You know, we offer audit services, tax advisory. All right. So that's what we do. And if you have any business you want, in fact, also we help entities also to, to file annual reports, register, generate TIN, register tax identification number, and all of that. So that is that. We all offer many other things. So if you need any information, you can at least get across to us. So thank you very much for your time, and enjoy the rest of the day. God bless you.
Thank you, sir.
All right. Thank you very much.
Thank you very much.
All right. Thank you, sir. Bye.
Thank you, sir. Hello, sir, will this video be shared or audio be shared?
Yes, it will. We will do that. We'll do that with the material. All right.
Thank you.